let's take a quick look at what the Federal Reserve has done. Everybody was expecting the Federal Reserve to actually drop the rates by even 0.25% or something. But the Fed has come back and said that, we think that we are going to hold it steady for some more time. And maybe in the second half, they may think of doing that. Now, usually when the market doesn't approve of that, there will be a sharp reaction and the market will tank. Play us through what happened after that, because today I see markets are up again. So what is going on really in the market, sir?
See, I think it's one segment of the market had anticipated a rate cut by March 31st or at least June 30th, an indicative trend from the Fed. But what the Fed is saying is that I still see there's no sustained control of inflation, unemployment. We still could be having some surprises which may drive the inflation up. Under these circumstances, we have to wait and see more sustained fall of inflation coming through the system. Clearly, the supply chain as well as efficiency in the other mechanisms and reduction in oil prices has all helped for the inflation to come down to about 3.4%. Remember, from November to December, it went from 3.2 to 3.4%, the inflation here. So what the Fed is saying is that under these circumstances, I'm going to pause. Growth is not my kind of agenda, but containing inflation is my mandate. So this is the Fed's position, and they basically even ruled out even a June. So we are now looking at the second half. Most of the people expected second half rate cut. Now, the question, therefore, is that tech companies all reported very positive earnings, but also gave a very cautious outlook for rest of 2024. Now, you're asking the question, okay, do you expect significant kind of drop in the market numbers or the market index? But on the contrary, the market seems to have absorbed and the futures are pointing to a slight rise. The markets are not driven purely by rates alone. The markets are also driven by consumer confidence and positive sentiments. The job increases. The job numbers which came after Dr. Jerome Powell's announcement pointed against 182,000 jobs. There was more than 353,000 jobs, non-farm payrolls added, which seemed to indicate, well, the people are recruiting, there's positive momentum, and therefore, this has to be reflected in the sentiment. So earnings is likely to be better, notwithstanding what the tech company stated. So that is what you saw in the uptick in the prices, Sriji. And the other important variable, which will go ahead, the oil prices dropped. You remember last week, earlier this week, when we said, the Brent was about $80. Sorry, it was about, so all these sentiments played a part in the markets absorbing the rate cut, but showing positive sentiments